Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name is Matthew Kidman, and we're talking about a possible correction in the market and how we play it. Since we're bounced from the COVID crisis, it's all been about the cyclical plays, all those companies that have done well over the years, rebounding from the great recession that we had. And to discuss whether we should get defensive and how we play it, I've got Ben Clark from TMS and Justin Braitling from Watermark. And the first stock, I'll go with you, Ben. Ramsay Health Care, hospitals all around the world. They thought the hospital sector was so good, they doubled up and made a big acquisition recently. Buy, hold, or sell?
I'll go hold, Matthew. This is one that should benefit from the world reopening. Hospital space should free up. And I think the timing of that acquisition actually made sense. You know, the Spire acquisition, they're doubling down on Europe. Ultimately, though, I don't think Ramsay is going to go back to those glory days that we saw a decade ago. I just think the private health insurers are a lot better managed these days, and the arm wrestle that occurs with the hospitals, it's an even battle, so stick with a hold.
Justin, Ramsay's been struggling. It hasn't really gone with the market. Buy, hold, or sell?
I think it's a hold, Matthew. I'd have to agree with most of what Ben said. Margins have been under pressure for some time. I don't think that's going to change. That's a function of greater scrutiny from the health insurers. Their business will recover as hospital capacity frees up and waiting lists are addressed. But we've already seen the best part of that, and it's back to normal trading conditions now. There may be a bit of upside if the states start to push more volume into the private sector to address waiting lists. But I think that'll be quite small. I also like the Spire acquisition. I think it was prudent, but that'll be a long time in paying off over a number of years.
Okay, Justin, sticking with you, is it time to pick up the telephone because it's been ringing for a long time? Telstra, buy, hold, or sell?
Well, Telstra has been a difficult investment for decades, but I think it's a buy for the first time for many, many years. Typically when you get a seminal change in network, like we're getting with 5G, you get a nice uptick in usage that drives ARPUs and revenues and growth in their mobile business. You're starting to see that come through already. There's less competition. Each of the operators are pushing their pricing plans up. So the mobile business will deliver good growth in the years ahead. They're restructuring the balance sheet, selling off the infrastructure business. I think they'll get a nice price for that. And so that fixes the balance sheet. So you've got, a business on a reasonable multiple, defensive. The roaming revenues will come back. So it was hit by COVID last year. As people start to travel again, those revenues will come back. So you've got a defensive business delivering nice growth in the medium term.
Ben, it's been a value death trap. Surely you can't agree with Justin. Telstra, buy, hold, or sell?
I'll slightly disagree. I'll go a hold. But yeah, it's definitely been a business that's caused a lot of headaches for investors. I agree with everything Justin's just said there. The rollout of 5G is going to see a lot of us upgrade our handsets. I think it's a much better competitive environment post the TPG Vodafone acquisition. There doesn't look like there's a lot of moves. David Teo's moved away from TPG, who would have potentially been the cat amongst the pigeons. But 25 times for a business that still is not going to have a lot of growth, albeit defensive, I'll go hold.
Let's move to the retail energy market. AGL has anything but energy in the last few years, down about 60%. Ben, AGL, buy, hold, or sell?
I'll go sell on AGL. There is a huge wave of disruption that is just starting to hit electricity generators, marketers, resellers, etc. It's only really just beginning. AGL is the massive incumbent. It's the dinosaur that is going to be picked off. It looks cheap. It's trading on 16 times. It could easily have a short-term re-rate at some stage, but I just don't think it's a reason to be in it. I think the long-term earnings are in decline. Sell.
Justin, dinosaur or darling, AGL?
I agree with Ben. It's a sell, even though it's fallen a long way. It's where Telstra was 15, 20 years ago as it ceded share in the telecommunications business. The energy markets are changing profoundly. There's going to be excess supply of power in the system as all these renewable projects are built. That puts ongoing pressure on the pool price. They're incredibly exposed to pool prices. So I think as pool prices continue under pressure, their profits continue under pressure. The split, there's probably not a lot they could do. It's probably the right decision. But whether the two businesses can stand on their own feet without having to inject additional capital, that's still to be addressed, I think. So only time will tell. But I think as a combined company, it's got a lot of challenges ahead of it.
Justin, let's go from a dinosaur to a possible white elephant. Sydney Airport, not being used much at the moment. Buy, hold or sell?
Well, there's a lot of potential value there, isn't there, just sitting there. It's interesting, if you look at the European airports, many of them are not far off their all-time highs. Obviously, they had a much worse experience in Europe than we have here in Australia in terms of travel. International travel will come back. It's an incredibly valuable asset. In 3 to 5 years' time, we'll look back and volumes will have recovered completely. And, there's no reason why that asset shouldn't trade where it was before the health crisis. So it's a buy.
Ben, if our Prime Minister and Premiers get their way, we may never travel overseas again. Sydney Airport, buy, hold or sell?
I think it's a cracking buy, Matthew. Whether it's 2022 or 2023, it will recover. And I think actually travel will overshoot on the upside to where it would have, the passenger numbers would have been if not for COVID. And then the other thing I think is that we're all probably going to need to spend a bit more time in airports as travel ramps back up. There's probably some new revenue streams that they'll, maybe doing testing before we get on flights, etc. So it's kind of like the uncertainty of when this all kicks off that I think is creating a great price opportunity. Once you know that travel's going to really start to go, this will be trading quite a bit higher, I think. So you need to buy it while the uncertainty reigns.
Okay, so we're flying there. Let's hit the road. Atlas Arteria, European roads, Europe's opening up again. Buy, hold or sell, Ben?
Yeah, this is a buy as well. So the major asset these guys own is the highway that connects Paris to Lyon. Traffic's been quite resilient, sort of 75% of pre-COVID levels, but France is opening up. Tourism is really starting to kick off again in Europe, albeit in fits and spurts. The vaccination rollout in France does look pretty slow and problematic, different reasons to Australia. But again, I just think it's inevitable that the traffic numbers will get back to where they were, and it's still trading at a big discount to where it was. The balance sheet's in good shape. And also a lot of the debt is now fixed, whereas the tolls are linked to inflation. So this is probably one of those sort of plays that actually could do okay in an inflationary environment.
Justin, is it like talking heads told us, you're on the road to nowhere, or is it a buy, Atlas?
No, it's definitely a buy. The same story. These European infrastructure assets have recovered nicely. Traffic flows will normalise. It's on a 6% yield. And the dividend, unlike a lot of other infrastructure plays, the dividend should increase nicely in the years ahead. They've restructured the management agreement, internalised it. They can restructure the way the balance sheet's funded. That'll allow them to stream more cash through to shareholders. So you've got a nice dividend growth story there and the recovery that will happen in the next couple of years. So I think it's a strong buy as well.
It's hard to play defensive, but it might be just time to hit the road, Jack. That was a great show. Buy, hold, sell. If you want to see more like this, why don't you subscribe to the Livewire YouTube channel?